Hey everyone, it's Evan from the Trade Risk on Tuesday, October 7th, and I'm here with my midweek update. So we'll kick it off with the SPY here, and we can see that today was a pretty ugly day for the bulls. We came into the day gapping lower below yesterday's lows. We had a small bounce attempt in the morning. It didn't lead to a whole lot. We went sideways for most of the day, and then we really saw the selling pressure kind of pick back up, and things started to break down later in the day, pretty much the last hour to an hour and a half of the trading session. So, I talked about in my recap on my blog Sunday about this downtrend that we were in, and I really wanted to see the markets back above this 197.50 level. If it could get back above there, it'd be a lot more neutral kind of stance on the market, and perhaps the V-shaped rally would be back in business. But, yesterday we did sort of fail there. We had, not the greatest close after trying to get back above there or challenging that resistance level yesterday. So I think that was sort of your caution sign, and today, today just really reminded us that we are in a downtrend. We're in a short-term downtrend ever since the beginning of September, particularly on actually mid-September, the 19th. And we've been in a downtrend since then, and you can expect bounces to be pretty ferocious, like this 2-day bounce was Thursday and Friday of last week. But then, very violently and suddenly, you can give those back. If we look at the IWM, this has been the underperformer, small cap index, the ETF that tracks the Russell. You can see we closed on the dead lows. We are now pierced below the support that's held for all of 2014. So this certainly doesn't bode well going forward. We need to see if we do see some more follow through to the downside tomorrow, but it's certainly not a place I'd want to try and pick a bottom or try and, look for a little bounce here, because the momentum's clearly in the bear camp right now, and they're gonna, we're gonna have to see if they can take advantage of that and break us down. So let's get into some individual names, actually some other markets first, and then we'll get into some individual stock names. UNG Natty Gas, I was long this back here, quickly got stopped out, about break even, maybe a small loss. It's back in this chop box range. Not too much to say about it, just keep it on watch. Again, TLT, this had a monster move today back to the highs of August, or the relative highs of August. So let's see how it works here above this 119.50 level. Not a position I own. It's sort of been tough to get involved in this if you weren't already involved in it, but TLT, keep that on watch. Into some individual names today. Apple, really not a whole lot of damage has been done here. Closed on the lows today, but a lot of names did. And, really 98 to 102.80. That's the range that I'm watching, and I would be an interested short seller of Apple if we can start to break below this $98. So, hasn't happened yet. Maybe we'll get it tomorrow. Maybe we won't, but I'll be watching $98 to potentially get involved on a short in Apple. Facebook, here's a name I am short, and it just sounds really weird to say because I can't remember the last time I've held Facebook short overnight. $76.90, really $77 or so, was essentially the point of control level I was using. It's not necessarily the classic support and resistance level that, that very cleanly holds. I guess really 75, 76, something like this would be more of the support level here. But it was a point of control that I was watching to see if Facebook could hold above. It spent the majority of the time above $77. And, we had this 1-2 bar sort of breakdown, really just this one bar on the 1st of October. And you can see we had a 2-day bounce. Yesterday we kind of went sideways. It looked like we were going to try and stabilize, and today we just gave it all back. So we basically retraced maybe 60% of this down bar, and now we're already heading back to the lows. So, when I see something like that, I'm interested in trying to short it. So the risk to reward ratio sets up here in Facebook, and I'm gonna go with it for a tight stop. I think it's worth a shot. So I am short some Facebook. Twitter, this one was really strong for most of the day. It cleared this $53 breakout level, this range of resistance that it's been in for the better part of a month. Yesterday was a nice digestion day. Today we started to break out above this sort of inside day yesterday, and it looked real good. but the market started coming in, dragged Twitter down with it. So, everything, all is well in Twitter still. I think holding above $53 would definitely keep the momentum in this name. I think if we do break below $53, you might have a false breakout here, and then you could get trapped back into this sideways range. So keep that on watch. But Twitter still technically very healthy. Tesla also another name now that's been remarkably healthy because it was the underperformer of the bunch for most of September. Last Thursday we got this gap up here. It probably, it definitely trapped some shorts down here, especially those shorting in the hole, and it hasn't given any let up since that day. Today we filled the gap, but we did still close nicely green. 260 to 265, this little band of resistance, this was the highs back in March as well. I think that's the level you really need to get back above, and then you can start taking back some of this this bear expansion bar back on the back on the 15th of September. So keep Tesla on watch. Next is GoPro. This one really continued its march higher today, but it did fade off, just similar to like a Twitter, a lot of names really. $94, this was the level I had on watch, 89 and 80. So we did close just below $94. Let's see how it acts tomorrow. Again, still a super strong stock. Today's topping tail here, a little pessimistic, but it's, how can you really be pessimistic on this name? Look at what it's done. So it's a remarkable intraday trading vehicle, but I still find it tough to be long or short it overnight. Alibaba, this one here, still just kind of in this digesting pattern since its IPO, 88.50 to 90.50. This is sort of a band of resistance that has held in this name. So, for me, I'm not an interested long until it can start to clear out and break above maybe 90.50, above $91 would start to look a lot better. Until then, I think you could hold it short, or just keep it on watch until a breakout if we ever do get that breakout. But right now, not too interesting, but maybe a setup that'll happen in the future. Ford, this one has just been remarkably weak. You can see even with this massive down bar we had back on the 29th of September, we couldn't even get a bounce going on this. We really just went sideways for 4 trading sessions, and now we're breaking down again. So this one, sooner or later, I'm sure that the dip buyers will be here. On a weekly chart, this one's a little more, you can see we've been in a nice uptrends ever since mid 2012, and it's only a matter of time before those long-term bulls kind of step in here and want to start buying this dip, or at least feeling it out. But for now, Ford, there doesn't seem to be any buyers in sight. So, part of Ford's weakness today could have been off General Motors' downgrade that it got today. And this one as well is kind of flirting with this breakdown of this head and shoulders pattern here. So, I think it closed 31.77 today, which is pretty much the lows from last week. Keep this on watch. It could head lower. Risk to reward, General Motors short seems a lot more favorable than the Ford does, just because it's so extended right now. But I think both are absolutely weak. Next is Soda, and this is a name that was very weak today. Massive gap down, as you can see, off of some poor earnings numbers, and I don't have a whole lot to say about it. I think really it just should remind you it comes with the territory. If you're going to trade in a stock that's been in a multi-year downtrend like this one has, I think news reports tend to surprise to the downside. So today, no exception here, down 22%, and it's just not an interesting chart that I would want to be a part of for any reason, technically, for sure. Price line, this is the next one, and 1120. So this 1120 level is a pretty major support level. It's held for all of 2014, and this is really a kind of a top shelf support level. You can see here we did kind of have this double top lower high put in August, as we only climbed up to about the $1,300 level. Couldn't quite get to the highs made back in February above around 1370. So price line here, similar to like the IWM, is hanging on, and it actually closed below today this major support level. So price line, a name I would not want to be a part of right here. It certainly could, get a bounce or start to stabilize, but for right now, I'd much rather be short Priceline than anything else. So keep that on watch. If you're looking for a long-term short idea, I think, watch the weekly close today. I think as long as it stays below this 1120 level, I think, Priceline should see further prices lower. A couple of ideas going forward. First is data, DATA. $73, $74, 73.70, something above there. I think a close above there could start to see this this uptrend get back in motion. We had an upgrade yesterday that did get faded, which was a little concerning. It did manage to stay green today, so keep it on your watch. If the market can stabilize, I think above $74, data looks good. Next one is Zen. This is a recent IPO, and it's broke out of this base here mid-August, put in a nice impulse up leg up to about $28, retraced a bit, broke out 2 days ago on Friday, and now it's sort of digesting sideways a little bit. Not ready yet, but let's see if this can flag out for maybe a couple of days, and then I think back above 25.50 or so could give you some upside continuation. So keep Zen on watch. Loco, here's the next one. I thought today would be the day it would get going, but it got faded pretty hard today towards the end of the day when everything started coming down. I think back above $38. Again, I'd probably be interested. I was interested today in it, but again, the close just wasn't that inspiring, so I wouldn't really want to be a part of it just yet. But it is one of the names that is acting a little better in this tape. Next is Duncan. Here's a short idea. Below this 43.50, 43.60 level, I think it's definitely worth a look on the short side. I am short some small half-size position right now, kind of sneaking in early, but I think if it can see some more follow through to the downside, I would make that a full-size position and see if Duncan could fall further. Finally, the Financial, MasterCard, and Visa. These are both interesting short ideas. They've been going sideways for most of 2014, and they are basically on support right now. Visa on 208, I think below here gets pretty interesting on the short side. I think you could see some nice momentum and maybe really challenge the $200 mark again if it can break down further from today's lows. So that's all I have for today. Good luck trading. Again, it's a dicey market. Bears are sort of in control here. So, let's be careful if you've been a complacent dip buyer. I think, I think the Bears are trying to challenge you right now to maybe change that thought process and put some pain on some of those eager dip buyers. So I hope that helps. Thanks for watching, and I'll catch you next time.